Public employee retirement pensions are paid with a combination of employee and employer contributions. This money is invested by pension funds to produce returns that make up the third and final funding source for pension benefits. As an institutional investor, trusted with the retirements of thousands of first responders, corrections officers, and public officials, PSPRS considers several key factors when determining and executing an appropriate investment strategy. The first factor is risk tolerance, or how much value PSPRS could afford to lose in a year or a more extended time frame. This is key because if investments lose value, employers must pay higher contribution rates to offset that loss. Hundreds of Arizona government agencies have employees in PSPRS-managed retirement plans. The financial realities for each employer are unique, and each agency would be impacted differently if contribution rates were to increase because of investment losses. Another major factor PSPRS must consider is its obligations, or how much money PSPRS will need to distribute to retirees and beneficiaries over the course of 1 year, multiple years, and even decades into the future. Each year, PSPRS provides about $1 billion to retirees and surviving family members. Looking forward, PSPRS must assume these payments will increase as more members retire and as pensions grow to account for inflation. For these reasons, PSPRS engages in a deliberate, low-risk investment strategy. This strategy guards against significant losses by taking advantage of investment opportunities that exist in public and private markets. Public and private market investments have defining characteristics when it comes to selection, valuation, volatility, and related expenses. Public market investments include stocks in companies that are traded on the U.S. and foreign stock exchanges. These investments carry low fees and small recurring expenses based on an investment's total value. Publicly traded stocks are flexible because they can be bought and sold quickly. To diversify stock investments, PSPRS buys low-cost index funds. These funds provide ownership in hundreds or even thousands of major companies. Stocks can be counted on to produce high returns over long periods of time. However, in periods of extreme volatility, stocks can lose significant value over the course of months, weeks, or even days, like during the dot-com bubble, 9/11, the housing market crash, and the coronavirus outbreak. This volatility can threaten public pensions, which must measure financial performance and set required employer contribution payments once a year. For this reason, PSPRS invests less than half of its assets in stocks and uses private market opportunities that provide greater access to domestic and global economic growth. Private or alternative assets are more complex and less prone to dramatic changes in value that are common to the stock market. This gives pensions a greater degree of stability for future investment returns and employer contribution rates. Private market investments can involve buying and improving underperforming businesses, or supporting new technologies, services, and ventures. Other alternative investments include lending money to generate fixed rates of return, or buying assets like real estate, energy, mining operations, and commodities. Many alternative investments operate on what's called the J-curve model, which owes its name to the shape of the line formed when the appraised value of the investment is measured over time. These investments initially produce negative returns. This temporary dip is created when the purchase cost and related expenses are charged against an investor's balance sheet. Over time, investors recover their initial investment and related expenses, plus profits and interest. Typically, when profits exceed certain thresholds, usually an annualized 8% return, a portion of this high return is shared with the private fund managers. By diversifying its investments in these ways, the PSPRS investment team minimizes the risk to the system, its members, their employers, and Arizona taxpayers, strategically balancing public assets like stocks with private and alternative investments safeguards against massive losses and helps to ensure steady, positive returns over time. In executing this lower-risk investment strategy, PSPRS also seeks to keep its expenses to a minimum. On average, PSPRS annual investment expense amount to half of 1% of all assets under management. This expense level is equal to fee levels paid by private and public sector employees who contribute to 401 defined contribution retirement plans. The bottom line for PSPRS? It's right there in our statement of purpose. PSPRS exists to provide uniform, consistent, and equitable statewide retirement programs for those who have been entrusted to our care. PSPRS, serving those who serve others.